Hey everybody, Brian here from quantlabs.net. I just wanted to highlight what you can expect now from me moving into the second phase of my strategy development and my algorithmic trading course for running basically your own automated indie trading business. So the second phase is going to be really focusing on equations used for futures and options trading, specifically related around fundamental analysis. And really, from the fundamental, when you look at how the markets have worked, especially specifically in the futures market over 100 plus years before even electronic trading came into creation, the futures market pretty well revolved around these simple concepts. Equilibrium in the markets based around fundamentals of supply and demand. I mean, that's how the future market works. So there's, over the years, have been proper equations that have come out of it that have been used even before electronic trading. So because of that same concept, with the course that I've shown, specifically from UC Davis in the book that I've introduced, what I've done is I've taken all the formulas that are introduced in that book and put them into a MATLAB conversion process to create actual MATLAB script files of a conversion of an equation. So for instance, from chapter 3, we've got this one where essentially we're dealing with here convenience yield, negative cost, and here's the arguments obviously and the return value. And I've got quite a few formulas like this. Here's another one. This one's the equilibrium relationship between futures and spot pricing, and very important things that maybe a lot of people don't really take into consideration. And I'm going to be focusing on these over the next few weeks, get them up, posted for my Quant Elite members, and doing actual lessons, live lessons on that. And what I'm speaking about is, if you come under anywhere on my website, you'll notice I'm going to be having these headlines at the top of my website with a date. That is the exact topic I'll be talking about on that Tuesday, each and every Tuesday at 8 p.m. Eastern Standard. And basically, we're just starting. I'll give you the details. Just come under read more, click more, wherever you find it. And what will happen is, because you need to be a member of mine for my Quant Elite membership, you'll be able to sign up for this course series. You can get more details by clicking here, and it will run through all the different phases, all the different stages that we'll be talking about. And of course, we're talking about building out a live trading system. So essentially what I'm referring to is, right now live, what we're doing is we're going in our second week of the building blocks phase to help you set up your actual system in Python. And then from there, we're going to start segregating out 3 different strategies divided up into separate phases. So I got phase 1 here, which I'll be talking about arbitrage, or can be also used for pair trading for any equity out there, be it an ETF, a stock, or whatever. And then we start moving into what I originally talked about, is the algos, the formulas, the equations used for both options and futures pricing. So now we are moving into that. And this is what I'm referring to for chapter from this book that I've highlighted from UCS Davis, and I've just gone through all the chapters over that and converting these formulas into Python, and then we're gonna have live lessons on this. So hopefully you'll be able to join my membership built around this. It's great for analyzing data and seeing what's happening in the markets for all the major commodities, for treasury, for major indexes as well. So hopefully this will give you a sense of where I'm going with this, and over the next few weeks you'll see more and more of these algorithms introduced to both all my members and to anyone out there in the public domain who's interested. Other than that, talk to you later.